Hi guys, welcome back to law class. We are discussing which topic today? Foreign company, second session, and will be our last session. Quickly in the first 5 minutes I will revise what we saw previous class once and I will tell you what is left today. Today we have to first spend the first 30 minutes quickly to go through all these leftover provisions, and then I will straight away jump to these questions. Companies incorporated outside India, 16 questions that we have, guys. Now all these 16 questions are taken from CA final, because this was earlier in CA final. So the level of these questions may be a little difficult, but it's okay. We will learn and understand this because first time it's coming in our new syllabus. The only source from where institute has previous questions for this chapter is final. So it's best we discuss all of this so we get some good control. Okay, super. Let's quickly revise what we saw in the previous class with the help of our material itself. If it's scribbled already, it's fine. First we saw in section 2 subsection 42, foreign company is a company incorporated outside India and has a place of business in India by itself or through an agent, physically or electronic mode. So very important point is it has what in India? Place of business. It's doing some kind of business in India. Such place of business can be physically or electronical mode. That's what we saw. I gave some examples for that. Then we move on to section 379, which said applicability of this. Applicability for this foreign company, this chapter is fully applicable. However, if it's a company, a foreign company, but more than 50% of paid up share capital equity preference is held by Indian citizens or Indian companies, and it becomes a company as if incorporated in India, and all provisions are applicable. What is electronic mode? We saw all of this if you remember yesterday. We saw this B2B, B2C, digital supply. Then we saw web-based marketing, accepting deposits from people in India, telemarketing. Remember all these points, guys. Now today I told you we're going to discuss some 16 questions. In those 16 questions, 10 questions are from this page. 10 questions will ask about 379 applicability, and this electronic mode includes what all. That's why we spent a lot of time yesterday on this. Remaining 6 questions, 3 questions will be in this section. 380. What should a foreign company do once they come to India and establish place of business? File to ROC in form FC1 within 30 days. Within 30 days I will file to ROC. What all documents to file? We saw MOA, OA, charter, company director details, all of that. And you have to appoint someone called authorized representative. Authorized representative. These 2 sections only are bulk of the questions asked in final earlier. Remaining 3 questions are from the rest. Remaining 3 questions I will tell you. Penalty 392 he asked. If you don't follow 379, 380, penalty. So then what about other provisions? Accounts of company, maybe one question. 381, we saw accounts of company. Few provisions. Every calendar year prepare P&L and balance sheet. If it's in foreign language, bring it to India. If it's in foreign currency, translate over here. Different financial year, central government approval. Then financial statement should be filed within 6 months from end of the financial year, and they have to do audit in India using CA in India, just like auditors chapter. This also we saw, guys. Are you able to recollect? Those who are watching recording, it's okay. Spend 5 minutes, quickly recollect. Then we saw section 382, display of name board. So far they haven't tested even in final in the past, but we have it, display of name board. Additionally add the country name and liability clause. That's it. Then we went to 383, never tested so far, but if it comes, I think one question tested, not never one. If a notice is sent to authorized person, it's equal to sending it to foreign company. That is section 383. Then 384, basically we said these chapters like debentures, charges, then books of accounts, annual return, then CSR, all these are equally mutandis applicable to a foreign company. So he can ask you CSR questions. Annual return, if he asks me, same thing, within 60 days from end of financial year. For other company, normal company in section 92 is 60 days from end of AGM. Why the difference we discussed. For a foreign company, they don't have AGM in India. So it's from end of financial year. I am not teaching anything new, guys. Revision of what we did yesterday, is it helpful in any way? Okay, super. Then we saw 385. This company also should pay fees. Just because you're a foreign company, you already have a lot of dollars, pay fees in 385. 386, certified means certified as true and fair. 386, nothing great in those sections. Till there we finished yesterday, correct? Then we left with 387 to 393. But in that, what is left is only 387, 388, 389, 390. All, and 393 is last section, I'll come to it. Whatever is left now is prospectus. If a foreign company wants to issue prospectus in India, what they have to do? Before even I go to the provisions, is there any change? No. Whatever you studied in chapter 3, section 23 to 42, prospectus chapter, same those provisions will come. What are same means not the whole thing, but extract of that chapter. So what is that extract we are going to see? Contents of prospectus, what all contents to be included, who should sign the prospectus, director, if expert is giving expert opinion, can I rely on that? Yes. Can he withdraw his consent? Yes. Those kind of relevant procedures. What happens if the prospectus is issued without signature? Not valid, becomes void. If there is a misstatement in prospectus, criminal liability, all those provisions will come. Are you following, guys? And few new things, in which case prospectus is not needed. Let's go section by section. Today's agenda is mainly those 16 questions practicing. So we will quickly finish these provisions, guys. First, I will go with the notes itself. 387 talks about dating of prospectus. They are saying, what is the first point saying? Summary. A foreign company, no person incorporated outside India. Basically, foreign company cannot issue prospectus in India unless it is dated and signed. Basic. This we already studied in prospectus chapter. Every prospectus has to be dated and signed. Same point, repeat. So revision of prospectus chapter and foreign company. Section 26, if you remember, contents of prospectus. Lot of contents were there. MOA, AOA, past financial data, future data, legal complaints. Same thing over here. Additionally, they will add, tell me about your country. Which country you are coming from. So look at all these data guys. MOA, AOA. Under which act the company is enacted. Indian company means Companies Act 2013. You are from some other country. Which act you are enacted? Which country you are coming from? Those kind of specific data. Address in India where the documents are available. Are you following, guys? Clear? So what are the first 3 points? MOA, AOA, act in which companies enacted, address in India. Now a simple question. If Apple is issuing prospectus in India and raising funds from Indian citizens, will you need all this data? Will you ask, hey, which act you are coming from? Tell me about you. Tell me your MOA. Will you ask? Why? Reputed company, everybody knows that brand. So the act is saying this is needed only for a new foreign company. If you are already here and established, no need to submit all this data. Who is the, when do we know that? The above point ABC, MOAOA, act under which it's incorporated and address in India is not applicable, make that small change, is not applicable where 2 years is completed since the date of incorporation of the foreign company. That means established company is trying to say no need. Will this be a separate question? No. MCQ he will ask, the company did not give MOA data because it's been 4 years since we incorporated. So what? It's fine. Are you getting anything difficult, guys? No. This is section 387. 388. Promise copy paste of export provisions from prospectus chapter. Prospectus chapter, you just tell me, I'll ask questions, give me answers. Everybody recording, if you know the chapter. Can prospectus sign, can the expert sign in prospectus? Yes. Can he withdraw his consent? Yes. When he can withdraw, if he feels the data is not correct or he wants to, if he feels it's wrong. Now, reporting. If he signs, can I rely on him? Yes. Is he liable if something is wrong? Yes. Same thing is in section 388. Provision as to experts' consent and allotment. Let's read for everybody's satisfaction. So how do I know it's same? Then why separate section is there? expert approval. If prospectus includes a statement from expert, then expert must agree in writing that statements being in document. If the expert changes their mind, he can withdraw the consent before the prospectus is officially registered. What do you mean by officially registered? Filing with ROC. Before that you can withdraw. Expert has not given statement or statement given by him is different from which is present, then the document prospectus can't be shared. Remember our example, if prospectus did not give something but still you are including as if he gave, can you share the prospectus? No, expert is not liable. Then he is coming and saying, no, he is saying, he should have told before itself. Prospectus must comply with basic provisions, section 33 and 40 of the Act. What is 33? Abridged. 40 is minimum allotment of securities relating to application form dealing with security application. Section 40 is application with stock exchange, and 39 is allotment, sorry, my bad. 40 is application to be dealt and underwriting. Anything new, guys? No. Even if you don't read section 388, it's fine. It's same as what you know. Clear, guys? So nothing new we learned today. Only one new thing, sir. In this whole last 10 minutes, what is the key thing I should take home, add to my Gen Z rocket notes? What is it? If the company is incorporated, how many years over? Yeah. The first three things, MOA, Act and address in India, no need to disclose in the contents of prospectus. Presumption is everybody knows about the company. Are you following, guys? Clear? Sir, then what if a company intentionally waits for 2 years, now without giving all these details, gives wrong information? Misstatement in prospectus, liable under 447. Are you following, guys? So 447 is applicable here also. Are you all following, guys? Perfect. Okay. Now these three blue dabbas or blue circles, sorry, what is given over here? Now foreign, don't read it, I'll give you example or a situation, you answer with just basic common sense and then we'll go read here. Foreign companies issuing prospectus in India without following this chapter, without following provisions of prospectus, but you are all who are giving the money are okay with it. So two people are not following law. The one who is issuing the prospectus and the one who is receiving and giving money. You are saying, Paravala, it's okay, I don't want to follow. We both made an agreement. Is our agreement valid? No. Any condition in the prospectus waiving the compliance of provisions of applicant with his consent or not, whether you agree or not, becomes what, guys? Void. This is common sense. Even if I didn't teach you, you will tell it's void because you can't, any agreement made cannot go against the act. That is basic. We learned that. Clear? Next. Now the next important point. Sir, which one should I remember? What can come in exam from this entire two sections? Only one thing. In two cases, foreign company prospectus is exempt. This is important. This goes into my Gen Z notes, goes into my rocket notes. Prospectus provisions in 387 is not needed in two cases. When issuing shares to existing shareholders or existing debenture holders, existing members or debenture holders, you know the logic better than me. Why? They already know about the company, no need to give prospectus again, just like rights issue. Securities issued are uniform with SEBI, previously issued and listed on recognized stock exchange. They are saying my company is already listed. I am now doing an FPO, further public offer, second issue for listed company, no need to follow here, but SEBI won't leave you. SEBI has their compliance, but Companies Act is saying no need. But still, what is applicable? Dating of prospectus is applicable. When I say dating here, date, guys. Okay, fine. Dating of prospectus, writing that date. So for foreign company, which two is not needed, guys? They need not give prospectus in case of existing members or debentures or a listed company going for an issue. But still, prospectus should be dated. You need to write the date. Are you following? Clear? This last point, no person shall issue a prospectus for a foreign company to anyone in India issued as a prospectus complying with the provisions of this. That means you cannot issue prospectus without following provisions in this chapter. Exception is what, guys? Underwriting. Because underwriting is not a public issue. Underwriting is a one-to-one issue with underwriter. Underwriter will take care. So the crux of this is 2 guys. One, or the crux of this page, 2 years completed. No need to give those 3 data. MOAOA, country from where I came, and address. Second, prospectus not needed. If I have to summarize, the crux of these 2 sections is 1. If 2 years are completed, the prospectus need not contain MOAOA, then address and act from which country it came. Which country and address in India is not needed. This is first. Second, prospectus not applicable in 2 cases. 1, existing shareholders or debenture holders or listed company, but this company still has to follow the principles of dating. They have to follow dating the prospectus. Okay. And the third key point is what? Prospectus itself is not needed when you are going for an underwriting issue with them. That's it. From this last 10 minutes discussion, core new learnings is this. What do I carry forward to my exam? Are you following guys? Clear? These are the provisions that goes into your rocket notes, Gen Z notes, all of that. Of course, we have the book. You do a one-time reading of that. You will get the same conclusion. Clear guys? Now we are towards the end of this chapter. Okay. I am a foreign company. I don't like to follow law. Okay. So I am a foreign company where I did not follow any law. Recording students, if you want to copy, just pause the video, copy it. Okay. Now, you guys copied? Yes, anybody wants to copy? Anyone? Yes, okay. Fine. Now, next. I am a foreign company who did not follow anything in section 379 to 393. Innocent buyer, Prakash, innocently became the CS of this foreign company. This foreign company told him, I will pay you 5 lakhs per month. So Prakash was happy because previously he was getting only 1 lakh per month, 5x job. So he quit his current job and joined this company as a CS. He was here for 3 months. Then he realized this company is not following law. He said better he leaves the company. He didn't want to be in risk because whatever he told, they are not listening. He wants to leave the company, normal resignation. He is saying 5 lakhs into 3. He wants 15 lakhs salary. Company has not paid. Company told, we have not followed law. We are not a foreign company, or we are a non-compliant foreign company. All the transactions we entered is void, so we won't pay you. Can they say that? No, the suit which is filed, or the case which is, can Prakash file a suit or case against foreign company? Is the case valid? They are trying to say, in simple words, even if foreign company is not following the law, it will not affect any third party entering into transaction with this foreign company. Are you getting it? Whatever the foreign company does in India, with whomever it does any activity with the third party, their rights are protected, their rights are still saved. Just because the foreign company has not followed the law, you can't say this third party will lose his right. Let me give an example to understand. Let's say Apple came to India, did not follow these provisions. You purchased an iPhone. After opening, iPhone screen was cracked, 1.5 lakhs. What you will do? New phone, replace. You went to the Apple store. They said, we are shutting down the operations here. We are not followed Indian law. You cannot get remedy. Will you agree? The third party entering into transaction with the foreign company, just because foreign company has not followed law, third party will still get remedy. Common sense. That common sense only is in section. Next page. This page is done. Section 393. Company's failure to comply with the provisions will not affect whom guys? Validity of third party. Now opposite. You purchased iPhone from Apple. After buying, you told you will pay tomorrow. They said, okay, how much you have to pay? 1,50,000. Now you learnt they did not register. FC1 they didn't file in. They did not follow provisions. So you didn't pay. You said, no, you register, then only I will pay. He said, who are you to tell me to register? You are not ROC. They filed a suit against you for recovery of money. Will the suit stand? No. The court will not accept this suit. Why? When they go to the court will tell, I can't see you. Who is this? Foreign company. No, I can't see you. Where are you? Sir, I am here. You are not registered. So you are invisible to law. So unregistered foreign company becomes invisible to law. Same provision you have studied in foundation partnership. An unregistered partnership cannot sue others, but others can sue a partnership. Same concept over here. A registered foreign company can sue others, others can sue it. But unregistered foreign company cannot sue others. The beautiful logic behind this is, court will tell, if you are not registered, you are invisible to my eyes. I can only see the other person who is Indian. Are you following, guys? Then company will get scared. They will register. Are you following, guys? This is section 393. Look at this. Where a foreign company fails to comply with the provisions of this chapter, it will not affect the right of third party against the company. However, it does affect the right of the company to sue the third party. Are you following? Same things over here. It will not affect when sued by a third party. Are you following, guys? Easier. This they have not tested. This they should test. In other words, those who remember section 69 of Indian Partnership Act, consequence of non-registration. 69 of Companies Act is CRR. Correct. Correct, you are right. 69 of Indian Partnership says consequence of non-registration. Same provision is there. Do you remember, guys? That's why 69 of Indian Partnership Act. That if you remember means I have a shortcut. 3 plus 3, 69. But that section if you don't remember, forget this. 393. Okay. Clear, guys? Following. Then punishment we finished yesterday, guys. Be aware of this punishment. I told you what are all the important punishments. Can we revise what are all the important punishments once? 127. Declaration of dividend. Numbers. Then I told you 447, 86, 76A, 132, 135, 147, then 447 is added here. Then I will still add one more thing today. 124, unpaid dividend also you please add. If you don't transfer, penalty is there in that. 124. Then anything else I told you is important. Now you add 392. I know our syllabus has so many penalties. At least bare minimum learn these penalty sections. If you want that 1 5-mark question. See, I am not saying this only will come. Sir told learn this. If you are skipping all the penalties, better learn at least this. Are you following, guys? But let this be the last thing that you are learning. Let this be the last thing that you are learning. Okay. Meaning finish the limits, finish the resolutions, finish everything. Then come to this last. Okay. 392 is a new section. So new penalty, be aware of it. Okay. 392, 393. Last two concepts. Quickly, exemptions under this chapter. As usual, central government will pass a notification and tell some companies can be exempted. Need not follow. In that current exemption we have is IFSC is exempt so far related to offering for subscription in the securities. International Financial Service Center. This you will see in many places. Correct? IFSC. Basically this is outsourced. In other words, US companies outsource service from Indian companies. They will have call center in India or call center for financing, bookkeeping, those kind of services. It is currently exempt. In many sections you would have seen IFSC exemption. Clear, guys? Are you all following? Easier? Okay. Now, next. Let me proceed to the last part of this chapter. Okay. Okay. Let me go to what is IDRs and GDRs. Okay. This time in our syllabus they added two new sections. 390 is Indian Depository Receipt, and in Prospectus chapter they added GDRs, Global Depository Receipts. Thankfully, they have not given us procedure in detail. They have just told us what is IDR and what is GDR, and in GDR section in 41 they were told a company can issue GDR if they pass special resolution. Same concept over here. What is IDR and GDR? Old dead concept. Again they brought it back into our syllabus. Institute likes to do that. Editor cut it. Okay, fine. Meaning today, oh, live is going on. Okay, we will cut it later. Okay, I didn't mean to say disclaimer. I just said by mistake, guys. Okay, it is very much relevant for you now for exam. No, follow. Now, what is IDR? Today, if you want to buy shares in some other country, how will you buy? If you want to buy Elon Musk Tesla shares, how you will buy, guys? See, Indian shares means you have to go to NSE or BSE and buy. Tesla is listed on Nasdaq, which is nothing but the US stock exchange. How will you buy? Earlier it was difficult. Now, because of globalization and so much technology, sitting in Chennai, India, I can buy shares of any company in the world. For example, there is an app called IndMoney, or there's an app called Vested. Many apps, guys. This is what I remember last. Just like how you create account in Zerodha or whatever, you have to create account over here. This will not take 5 minutes. Maybe it will take 1 or 2 days with multiple KYCs. Then, just with the click of a button, you can buy shares of any company in the world. Directly, you become shareholder. You need to follow FEMA guidelines. That's it. Are you following? But earlier, before this facility came, it used to be through Indian depository receipts. What is it? First read what is IDRs. Okay. Now, before we read that, I'll give you a simple example. Same Tesla company, okay, if they want to get Indian people to buy, Indians will be here, okay, somewhere here. This Tesla company will give its shares to Nasdaq. There they will have their own depository, or we call it as a custodian bank. Make it simple. They will give the shares to Nasdaq. Nasdaq will transfer that to Indian NSE or BSE through the help of depository or something called a custodian bank. I'm just trying to keep it simple. It's a big chain. Now, this Indian NSE or depository custodian bank will issue IDRs to Indians, which is called Indian Depository Receipts. If you buy IDR, it is not equivalent to buying Tesla shares, but it is the backing of this IDR's value goes up and down based on the movement of Tesla shares. So I don't have to directly buy Tesla shares. I will buy IDRs issued in India. It is equal to buying Tesla shares. Are you getting it, guys? This is for a foreign company to raise money from India. Now go read this. IDRs are basically, in simple words, Indian depository receipts are like certificates representing ownership in foreign company. That means foreign companies issuing security in India, they allow Indian investors to own shares in a foreign company traded on Indian stock exchange. So IDRs are traded on Indian stock exchange instead of Nasdaq. IDRs simplify international investments, letting Indians access global companies without directly navigating. Are you following, guys? For this, central government has made some rules for transmission, which is how to issue this, what is the process, which is there in SEBI guidelines and other rules, which is not there in our syllabus, not there in Institute Study Mat, so you don't have to read. Are you following, guys? Clear? Institute Study Mat doesn't tell you what is the procedure. We just know what is IDR. Then, if IDR is here, what is GDR? Opposite. Global people want to buy Indian companies. Let's say, take an Indian company, Tata Motors. Now, Tata Motors share, let's say Elon Musk wants to buy. He can't directly buy. He will buy the GDR issued in his country representing Tata Motors. That is why IDR is in foreign company chapter, GDR is in prospectus chapter. Are you getting it? Where foreign companies raising money through issue of IDR, it should be in foreign company chapter. Where Indian companies raising money abroad, it should be in our chapter, prospectus. Are you getting it, guys? I covered two sections, 41 and 390, IDR and GDR. If you are aware about what it is, it's enough. Anybody wants me to repeat, I will do it again. Please ask. Anyone? Feel free to ask. Forget about recording. They will see, they will fast forward. Hello? Not against you guys, I'm just saying, everybody. Yes. One more time, quickly. I will explain GDR this time because I explained IDR. Okay. Let's say Elon Musk wants to buy ITC shares. ITC company shares will go to BSC. Through BSC, it gets transferred to NASDAQ, and NASDAQ, keeping the backing of this ITC shares in BSC, to Elon Musk they will issue GDRs, Global Depository Receipt. So Elon Musk buying GDRs is almost equivalent of him buying ITC in India, but this GDR is bought and sold in NASDAQ. Are you following, guys? Now one small clarification here, meaning this is correct, GDR is correct, but because you are going to US, it's not called GDR, it's called ADR. What's A? American Depository Receipt. Apart from US, any other country is called, that we don't have in syllabus, but just for knowledge. If your Indian company is going to US means ADR, American Depository Receipt. Any other country, GDR. That's it. Are you following, guys? That clarification, I hope it's clear for everybody. Clear, guys? Okay. Yes. Yes, he is the shareholder of ITC. He will get the rights. Just like how his question is, sir, will Elon Musk get shares? Will he get bonus? Will he get dividend? Whatever ITC shareholders in India get, he will also get. This is the default rule. I am repeating. Whatever the shareholders here in ITC get, same Elon Musk will get. That's the default rule. But that depends on the agreement between NASDAQ and BSC. Depends on the issue agreement. Sometimes they will change based on each issue. Are you getting it, guys? Okay. Yes. Yes, it will of course disturb foreign exchange. So this has to comply with FEMA. We will see in FEMA chapter how foreign exchange can move. Yes.
Elon Musk buys shares, a big percentage of shares from ITC. So can he influence the company just like how Indian purchase shares?
That's what his voting power depends on the agreement of issue. When we are making the issue, the terms will, each term issue will change. Today it's not a challenge because Elon Musk need not go in this long route. Directly he can buy in ITC.
The dividend paid on Indian currency?
Yeah, dividend will be paid in INR, converted to dollars. He will, through this mode, he will get the equivalent dollar value, again based on the agreement, guys. See, default he will get what Indians are getting, but agreement will tell some changes for each issue. Clear? Anybody else, any other doubt? Clear? Feel free to ask. That's it. This is ADR and GDRs. That's what we have here. What is Indian Depository Receipt? Are you following, guys? That's it. Just one more section left. I'm just checking if everything is done. Yes, here punishment, everything is done. 393 company's failure is done. I am done with offer of Indian Depository Receipts. This also is done. This side one small, again prospectus related. Prospectus has to be registered, guys. That is section number 389. Repeat of what we know. Look at this. Every foreign company where they are giving prospectus in India, expert consent, then it should be annexed. The prospectus should have the following attachments: expert contents, appointment of managing director or manager, details of material contracts entered in the last 2 years if they entered, copy of underwriting, copy of power of attorney, authorized agent. All this should be given, and then it should be certified by a professional. Who is the professional? It has to be certified by chairperson and 2 other directors. What will they certify? They will certify everything is true and fair and registered for registration. Are you following? I will summarize this section instead of being a little fast here. They are saying the prospectus of a foreign company issued in India should contain all these attachments. MOA, AOA, then signature. When you are registering, signature of managing director or manager, chairman, and a copy of underwriting, and it should be authenticated below by these people, purely procedural. Clear, guys? That's it. With this we are done with all the provisions of foreign company, but what is important for me in this session is these questions. So everybody has these questions for you in page number 269. Those who are watching recording, just check the description of this video. You should be finding it there. Otherwise you message us, we will give it to you if you really need it. Okay. 258. We will do these questions and then close. All of you with me, guys? Hello? That's it. 16 questions. Foreign company is done. When do we go home today? Once these questions are over. That's it. Okay. Fine. Follow, guys. I am again repeating, all the attempts that you can see here is CA final attempts. So we are doing final questions, but same chapter, nothing new. Let me keep it easy first for everybody's comfort. First easy. Go to question 3. Since it's recording, I will itself read the question. Otherwise they can't hear me or they can't hear the one who is reading. Ronnie Coleman, a foreign company, failed to deliver some documents to the registrar under 380. State the provisions for failure to deliver documents. Penalty under section 392. And you should also write about FC1. If they come to India, deliver within 30 days all those MOA, AOA. Clear up? And the answers, the detailed exam presentation answer is available with all of you. Just scan that QR code in the book. Those who are watching online, down link. Okay. Fine. Question number 3 is done. Next. Question number 2. I am going in random order, whichever order I like, guys. First I will finish some 4-5 small questions, so you will get confidence out of 16, 5-6 questions over. Then we will take the big questions. Okay. Because once it becomes 7:15, Riya will get little, what to say, class getting over. So before that I want to finish half the questions. LMP Paper is a company registered in Thailand. Okay. Hey, I didn't say anything here. I just pronounced Thailand. You are reacting. Okay. Although it has no place of business established in India, yet it was doing online business in India through telemarketing in India. Explain whether it's treated as a foreign company. See here, even though it's not having place of business established in India, they are trying to say there is no physical place of business, but you have electronic place of business. Is it a foreign company? Yes. That's it. Are you getting how the questions are coming, guys? Question 2. In case foreign company does not deliver documents to ROC under 380, state the penalty prescribed under the Act, which can be levied. 392. For everyone's satisfaction, this is 392, guys. Okay. Fine. Recording students mainly. Okay. Done. 2 questions are done. Easy, guys. Like this only. All these are final questions, guys. Now we are doing final questions, but now it's no more final. It's inter. Okay. Fine. I will come to the big question later. It's easy one only. Okay. Let's do question number 4. 4 and then 5. 4, 5 and then back to 1. Okay. Examine whether the following is a foreign company or not a foreign company. A company incorporated outside India employs agents in India but has no place of business in India. Is it a foreign company, guys? See, incorporated outside India employs agents in India but has no place of business. No. Is it a foreign company, guys? See, what is the definition? Look at the definition. For company incorporated outside India has a place of business in India by itself or through agents. Here there is no place of business but through agents. Is it foreign company? No. Are you getting it? See, the primary condition is place of business. Such a place of business can be by itself or through agent, physically or online. Here, place of business is not there. So what if you employ agents, has no place of business, it's not a foreign company. Next, a company incorporated outside India, having shareholders who are all Indian citizens. Is it a foreign company? Again, it's a subjective question. You need to write, it should have a place of business in India. See, first remember guys, it should meet the definition of 2 subsection 42. Then only I can check for that 50%. Here, they have not given about place of business. So imagine, let's say, Alibaba of China. It's operating only in China, not operating in India, for example. In that, if Indians are shareholders, it's not a foreign company. Foreign company should first meet the definition of 2 subsection 42. Place of business in India, then only the other limbs itself will get activated. Here, incorporate outside India, having shareholders who are all. Question is silent regarding place of business. So I will take it as no. But if place of business is in India, then it becomes a foreign company. Next. A company incorporated in India, but all shares are held by foreigners. Is it a foreign company? What company it is? It's an Indian company. Hey, Indian company is incorporated in India. I don't have to see anything else. Confusing our questions. Final questions brought to enter, guys. So I told you, questions are going to be little higher order thinking questions, but still we are able to answer. Company incorporated in India comes itself. You don't have to worry about this chapter. This becomes an Indian company from day one. Okay. Next, a company which has no place of business established in India but doing online business through telemarketing. Carefully answer. How many of you yes? How many of you no? Now, look at the words very carefully. Answer is yes, because of telemarketing and it has a place of business. The key word here is established. They are trying to say physical office is not there. See, a company which has no place of business established in India, but it's doing online. That means it has place of business, but not through physical mode. I will tell the difference between, see, this question, we just now saw one more. Question 2-1 is the same. Look at 2-1. There is Thailand question. Now you will remember. Although it has no place of business established in India, it's doing online business through telemarketing. There you told yes, sir. The same question only no, guys, here. Thailand means you are saying yes. Here you are saying no, guys. Come on. Are you following? Clear? No, that if this question, if I change it, if the word established is removed, company is not having place of business in India, but it's doing online business, then I have to ask a question. Through telemarketing, that is place of business? No. You can't say no place of business. Here, established is talking about the word physical office. Are you understanding? I told you, all the questions are going to come from this one section, 379, and that circular issue. Okay. Easy, guys. Like this and all you can expect, guys. I can't tell final and all. This and all can easily ask. Otherwise, nothing else they can ask. Question. If established is not given, you have to take an assumption. Through telemarketing, are they doing business? Is it a one-time thing or a regular thing? See, doing online business, recurring thing, then it's place of business. A one-time transaction, no need. The word business means recurring. Are you following, guys? Clear? Okay. So exam and all don't have to mug up. It's application of concepts. Next. Identify which among the following is categorized as foreign company. First, incorporated in Malaysia, foreign company, registered in Malaysia. So the question is incorporated outside India. Okay. Additional condition, developed patient database for hospital in India, server in Malaysia. Is it a foreign company? Develop patients database for a hospital in India. Server, did I anywhere talk about server? Server can be anywhere, guys. I don't care. Now, developed patients database for hospital in India. Foreign company or what? Where is the place of business here? In India. See, developed patients database for a hospital in India means work is happening in India. That means the assumption I am taking here is place of businesses in India. Then it becomes yes, because place of then for yes, because it's happening through online electronic mode, and the word database is also there here. The clarification you have to give in answer is here, guys. Find database. Come on. Cloud. Where is it? Point number C. Transaction and database services and products. So this DABA is very important, guys. Any word covered here like telemarketing database gets covered. Yes. Ask the daughter.
Page number 160. So the page that you just took,
Yeah.
so bottom left corner there's a point I can't make sense of.
IFSC.
Yeah.
Want me to explain? Yes, I will do that. I will finish that question and come back here. That full question, yes. Okay.
So the database may be the details regarding the patients.
Correct. So here, that's why I am taking an assumption here. Question is not fully clear. Developed patient database for hospital in India. Will they do it for free? That means they're doing some business in India through online mode. So it becomes a foreign company. That's it. Okay. Next question 2. Incorporated. Dubai. Registered. Clearly he is giving no place of business in India, but employs agents in India. Is it foreign company? No. Agents will be an additional condition with place of business, so there is not a foreign company. Next, you should know the answer. Incorporated in California, registered in California. India, they are doing board meeting because cheaply they can rent here. So, is this foreign company? No. Meetings and all we never discussed. The place of business. Sir, in the meeting they are doing business only, sir. They are discussing business. No. Okay. Answer is no. Are you getting it, guys? Next.
So meeting should be held in register office. So then
Correct. So Kirtan has raised a beautiful question. Sir, meeting should be held in registered office under section 96. 96 will be followed by which company? Indian company. Incorporated in California means US company. Why he will follow 96? He will follow his company's act. What is in US company's act? I genuinely don't know. I don't want to know also for this class. Okay. Following, guys. Clear? Kirtan? Clarified? Okay. Yes. Next. Incorporated in Australia. Register also Australia. 59% of the shareholding is held by an Indian company. Is this foreign company? Depends on place of business. Now, if place of business is in India and then there is 59%, then it becomes foreign company. No, place of business is fully there, but percentage is over here, then it's not a foreign company. You need to give open-ended answer. They have not given very clearly. You can take any assumption, guys. The actual answer in this MTP, they gave it as no, taking the assumption place of business is not in India. Are you following? Understanding that place of business is key. Only once you become a foreign company, only other things. Next.
In this case, 59%, more than 50%, like it will be treated as
No, I will again clarify that point. Okay. Tell me a company which is not having a place of business in India but a foreign company. Example, tell me a brand which is not there in India but you know about that brand. Netflix. Adidas is there in India. Tell me a brand that you know, guys, that which is there abroad but not in India. Oh, beautiful. Tesla, guys. Costco bola. Supermarket. Okay, I didn't know Costco. Anybody knows? Okay, Walmart. Okay, Walmart. Can we go with Tesla, Walmart? Sorry, Costco, not many, but it's an example. Oh, correct example. Now, Costco, Tesla, or Walmart. Tesla is a US company. Now, imagine Rohit tomorrow has earned 30,000 crores. Now, Rohit purchased Elon Musk's Tesla. So, now Tesla is still a US company, not having place of business in India, but the full shareholder, more than 50% is Rohit. Is he doing business in India? Why should he follow Indian Companies Act? No need to follow. It's not a foreign company. Are you getting it, guys? So, if you are not a foreign company under 2 subsection 42, you don't have to bother about any other question. Act is not applicable for you. That's how I started. Here, company Australia registered Australia. They have genuinely not given details about place of business. So I will give both the answers. If place of business is in India, 100% Indian company. Place of business not in India, not a, sorry, if it's place of business in India, yes, it's a foreign company with full provisions. Place of business not in India, not a foreign company. Are you getting it, guys? Next. Incorporated Washington, registered in Washington, offers and invites deposits from citizens of India but has no place of business in India. Is it a foreign company? No. Same thing, it has place of business. Then, yes, because inviting deposits we saw in this point. But for this point to be applicable, it should be a foreign company under 2 subsection 42. Are you getting all the questions we are solving is just in this page? Are you getting it, guys? Okay. Fine. Last one. Germany. What is this? Incorporated outside India, registered outside India. 49% of shareholding is held by. It's not more than 50. So, if no place of business in India, then it is not a foreign company. But if place of business in India, it's a foreign company with respect to this chapter. It will not follow entire provisions. I will clarify this. Look at this. I will explain. Foreign company, I told you in 379 is of 2 types. A foreign company which satisfies definition of 242 and a foreign company which satisfies definition of 242 plus more than 50% is held by Indians or Indian company. For this company, they have to follow only 379(2), but they still refer back to other sections. For this company, 1 to 470, all sections of Companies Act. Now here, this company is having only 49%. So it will not come in this. It's not going to come in this because it's not more than 50%. It can either come here or not come here depending upon where the place of business is. So again I will give open-ended answer. If place of business is not in India, this chapter itself is not applicable. If place of business is in India, then it becomes a foreign company. Are you following, guys? 49% of shareholding held by an Indian company. Okay. Yeah. Are you understanding, guys? See, here place of business is key. Are you guys understanding? Okay. Case 1. See, in case 1 I am assuming place of business in India because they have not directly given, but developed patient database means it's some business in India. So since place of business in India through electronic mode of doing database service, it becomes a foreign company. Again assumption on place of business. Some points it's easy. He has clearly given no place of business. I will write no. Following, guys, everybody got it. Now back to this doubt we have from few students. Note, securities offered or listing of securities in IFSC SEZ location is not included as part of the term electronic mode. What is SEZ? Special Economic Zone. In IFSC, that particular location where we have this International Financial Service Center is not included in the term electronic mode. He is trying to say the point B above, offering or inviting deposits by a foreign company in India in the location of IFSC is not a foreign company because everything is part of exports. That location becomes a foreign location. Are you getting it? SEZ basically, for you to understand, you know, in GST, anything that happens in SEZ, income tax is exempt subject to income tax provisions, GST is exempt. Why we discussed yesterday? End of the class previous video, I gave the India example, Dhanush laptop. We need more foreign currency to come into India. We have to promote exports. So to promote exports only, we have this. That's why taxes exempted, and that's why you have concepts like make in India, etc. Are you following, guys? Understanding? Everybody clear? Hello? Following? Not satisfied? No. Securities offered or listing of securities in IFSC SCZ locations is not included as part of the term electronic mode. In simple words, you take it like IFSC company issuing securities is not covered in electronic mode. That's it. Companies in that IFSC location is not covered. Following? Clear? Perfect. Let's go to questions. Question number 1. Big question. Okay. Zell Power is a foreign company as per definition provided in the. He's told it's a foreign company as per 2 subsection 42. It's strictly observing the provisions stated in the foreign company while registrar ROC Delhi. Remember the main registrar ROC is in Delhi in India. In the opinion of ZPL, apart from observing the provisions of 380 to 386 along with 392 and 393, ZPL also needs to observe other provisions of the Act. They are saying for you, section 1 to 470, everything is applicable. When is that applicable? If you have more than 50%. That is what you have to check here. Okay. ZPL also needs to observe other provisions with regard to business carried on as if it's a company incorporated in India. It is not agreed to the opinion of registrar and continue to observe only those provisions. What they are doing, they are not following all the 470 sections, they are following only foreign company provisions. You basically have to check how much of the share capital is held by people in India. That's it. Look at this. ZPL capital includes ordinary shares 6 million at face value 5 pounds with 2 paid up, 12 million preference stock of 10 fully paid up which is 12 million. Debt to fund is 21.25 million. Do I care about debt fund? No. Mrs. Trishi, who is an Indian citizen and residing in India being part of the promoter group, owns how many guys? 2 million, 2.9 million approximately guys. 1 million is 10 lakhs. Now this question in your exam will not be in millions, they will write 60 lakhs whatever. 1 million is 10 lakhs. She owns 2.9 million. Let's do a rough computation. Here 6 million is roughly about 60 lakhs, but with a paid up value of 2. Look at the provision. The provision says more than half of the paid up share capital. Paid up share capital. See, computation will be a little complex because it's a final question. For us it will be easy, but let's solve it just for our satisfaction. So 6 million paid up values 2 means you have to convert. So how I will do that? Let me do it easily. I will do 60 lakhs approximately into 2 by 5 to find the absolute value. How much is that? 24 lakhs plus this is equity. Preference 12 million preference shares 1.2 million. So total value 12 million, 1.2 million of 10 each fully paid up. This is as it is. What is the value? What is 12 million? 1.2 crores. 1.2 crores. Correct. 1 million is 10 lakhs guys. 12 million into 10 lakhs is 1.20 crores. So I will write here 1 crore 20 lakhs. Our exam we will not get in millions. Don't have to panic. Million kurta 1 million is 10 lakhs. Just convert. So my denominator roughly becomes 1.44. Now come to the numerator. In this Trishi, who is Indian citizen residing in India, being part of promoter group, owns 29 lakh shares approximately. So for Trishi it will be approximately 29 lakh 32,780. 29 lakh 780 into 2 by 5. Correct, as number of shares into 2 by 5. Okay. And Neeram residing in UAE owns how much guys? 1 lakh 9,205. So I will add 1 lakh 9,205 into what is the face value here? 10 into 10 fully paid up. Modern Engineering, that Indian company, owns 67,220 shares and 1 lakh 42,000 preference shares. So 67,220 will again become 67,220 into 2 by 5 And again they own preference how much, guys? 1,42,380. 1,42,320. This will be full into 10, correct? Plus I am adding all the Indian company. Preference shares of Raj Investments, Indian company owns 3,93,475. So plus 3,93,475 into 10. You divide this, see if it's more than 50%. I will again explain how to do it easy. Don't expect such a complicated question. It's a final question, guys. Okay. You need to do all these additions. I'll give you a shortcut. I'll give you a simple shortcut. Denominator, let's do sharp. How much are you getting? 0.61. More than 50% off. So it's a foreign company. 0.61 into 100 you do. 61%. So it becomes a foreign company. Yes, I will explain the whole computation again, guys. First I solved. Let me solve it. How many of you understood? I will explain for everybody. Follow. Don't panic. It's a final question. I'm just trying to bring all the questions that we have. Questions we will get is basic questions only. First denominator, you add all the share capital which is available. Preference is easy in this question. So preference, you just have to add whatever is given in the question. Let's finish off preference. Preference here is 3 lakh. Sorry? Oh, sorry, that is one. Here preference is 1.2 million. So 1 crore 20 lakhs. Let me do in number of shares itself. It becomes easy. And here equity, even though it is 60 lakh shares, it's only 2 paid up. That means what is the exact number? Look at this. 60 lakh shares into 2 whole divided by 5. How much you are getting? 24 lakhs only. I will take absolute paid up value. So my total paid up value will be 24 lakhs plus 1.2 crores. Now you write the numerator number of shares. Forget the value, guys. Let's just write number of shares. Okay. Number of shares. Here, first let me write all the preference shares, guys, easily. You write down. Preference is 1,42,320, 3,93,475. So write here how much, guys? 1,42,320 plus 3,93,475. I am writing only preference. We have one more preference. Where is that? Neerav owns 1,09,205. 1,09,205. This is my preference. Just like the denominator here, I am adding on top. Have you understood till here, guys? Everybody clear? Now the other shares of Trishi, I need to convert into equivalent number of paid up shares. Trishi has 29,32,780. So 29 lakh. How much? 32,792. 780 into 2 by 5. How much you are getting? 11 lakh 112. This is the equivalent number of shares. But equity I am just doing into 2 by 5 plus here 67,220. That is also equity shares. So 67,220 into 2 by 5. How much? 88. That's it. So what I am doing basically over here, all the equity shares I am converting into 2 by 5 to find the paid up value. Denominator also I am converting into paid up value. Preference I am taking as it is, as given in the question. Here also as it is as given in the question, because this given is full, the face value is fully paid up. Now if you divide, you will get how much, guys? Some 61% into 100 you do, guys. Into 100. They have more than half, so it becomes an foreign company which has to follow all provisions. Are you getting it, guys? Don't ask me if this doesn't come in exam. I am taking it from ICAI source only, guys. Usually what happens, I'll give an example. If I'm telling you why I'm solving these sums. If you take AS 28, impairment of assets, which is newly added in our syllabus, the questions that is there in your study mat, in CA Inter new syllabus study mat, Go check the current CA final impairment chapter, same question is there. So we are doing the same sums, correct? That means foreign company also came from final. That means if we solve this, if not your attempt, some attempt they may ask if they want to keep the paper difficult. But honestly, is this difficult? No, it's just multiplying into 2 by 5. Clear? Understanding guys? Just be aware guys. Okay. 57.6. Something more than 50 guys. That's it. Clear. Recording students, rewind, pause if you want to copy. This is question number 1. That's it. That's why I did question 2, 3, 4, 5 first to give you some confidence. Then I took away your confidence in question number 1. Again we will rebuild the confidence. Come on guys. Question 4, 5 over. Let me do some easy questions again. Question number 6. Previous year question paper. CA final Jan 2021. COVID attempt. Opt-out attempt. Okay. Fine. Following guys. Padma understanding? Sure. Let's finish off these questions guys and then we will close today. Please, let's finish it off. Phil Health Systems Incorporated is a foreign company registered in Australia and has established place of business in India. It becomes what company? Foreign company. The financial statements pertaining to Indian business operations for the year 31st March were prepared by the company. Referring to the provisions of the Companies Act, advise the following. Easy questions from now. Whether they should be audited. First question, whether the account should be audited guys? Yes. By whom? CA. CA in practice. Which chapter? Audit and auditors. Second, what is the due date for filing audited FS with Register of Companies in India? Financial statements should be filed within. Annual return is 60 days. This should be filed within 6 months from end of financial year. This one guys. If I show you provisions. 380. Here, yeah, 381. 381. Every company under the charter shall within 6 months from end of financial year file with the following financial statements. Note, it should be audited by a CA. For Indian operation, it should be audited. Are you getting it guys? Clear? Next. What is the effect of the contract entered by Indian company with PSHI in case FS is not filed? If FS is not filed, what happens? Penalty 392. Is the company's transaction still valid with respect to Indian company? 393. What is 393? Failure to comply with the provisions of this act. Still those contracts are valid with respect to Indian companies. Are you getting it now how they are linking guys? I told you questions are little higher order guys, but if you know this, beyond this they can't test an exam. I can guarantee at least for the next 5 attempts we are saved. You are not going to go to 5 attempts guys. Example I am saying for when you are watching recording whichever year you are watching. Okay. Fine. Okay. Everybody clear guys? Those who are watching recording, if you are writing exam in the year 2024, you watch this. 2026 you are watching recording. Sir, amendment took place. Don't blame me. Okay. Fine. Are you following this guys? First question, CA should audit. Second, file within 6 months. Third, if you don't file, penalty in 392. But the effect of contracts is still valid in section 393 with respect to the other party in India. Foreign company cannot sue. Easier. Which e-form and within what period should annual return be filed guys? Annual return should be filed within 60 days from end of financial year in form FC4. They won't ask you form in exam. FC4 is correct. Form was mandatory in CA final. Important. Here they will not ask you guys. So they will ask you what within 60 days. Are you getting the answer guys? Able to recollect honestly guys? Next. That's it. After this all questions are simple small ones. In light of the provisions of the act, whether it's foreign company or not, quickly. Redstone is a company registered in Singapore. Board meeting is having a board meeting in India. The company is having, is it a foreign company? No. Quickly. Next. Blue Star Pacific registered in Thailand. Thailand means what, guys? Yes. Thailand has authorized Y in India to find customers and entered contract of company. Yes. They have agent, place of business. Okay. Following, guys. Hey, Thailand means exam, don't write yes, guys. Here it came, yes. X Limited Liability X some company registered in Dubai has installed main server in Dubai for maintaining office automated software by cloud computing for its clients in India. Foreign company registered in Dubai installed main server in. We don't care about server. We only care about place of business. Place of business for cloud computing for its client in India. Is it having place of business in India? Yes. In that list, cloud computing is there. Yes. So answer is yes. It's a foreign company. Are you understanding? These kind of questions you expect, guys. Are you following, everybody? Hello? Hey, genuinely understanding, huh? Fine. Okay. Next. Tokushi Motors. Okay. Sorry? No, agent he has, but he is doing office automation by cloud computing in India. Second, has authorized Y in India to find customers and enter contracts with them on behalf of company. That is what? Place of business. Why should I find customers in India? For doing business. To enter contract with them. That means place of business is there. That's the presumption I am taking from the question. Are you getting it? See, they can't tell, hey guys, place of business is there. From the question you have to pick it up. Okay, next. Tokushi Motors was incorporated in Japan. Tokushi is Toyota, I think. Okay, Toyota. Its share capital is held by the following persons. Oh, thankfully, they gave direct percentage. Citizens of India, 10. Indian company, 40. Totally, 50. What is the provision telling me? More than 50 or not less than 50 or? Not less than 50. That means 50 or more. Like this he will test, guys. This he will test. It's 50 or more. Here it is 50. So it becomes Tokushi is an foreign company to follow this chapter, not Indian company. Are you following, guys? Understanding? Guys, happy about foreign company in syllabus? Okay. The company has opened its representative office in Mumbai on 15th Jan in order to receive orders from Indian market and make available the delivery of Japanese luxury cars to the Indian purchasers. The company was not aware of Indian company law. Now only we are also learning. Hence could not file the required documents to the registrar. They have to file within 30 days of establishing place of business. That means from 15th Jan within 30 days. The company could file all the requirement documents only on 28th Feb. Can I excuse him? Penalty in section 392 that ROC will decide. Whether the provisions of chapter are applicable to Tokushi? Yes. Because more than equal to 50%. Provisions are applicable to Tokushi. What documents are required to be filed? 380. File within 30 days in form FC1. What documents? MOA, AOA, address, details of director, passport, all of that. Remember in 380, guys, those documents. By what time all should be filed? 30 days. So you file the exact date. From 15th Jan, 30 days comes to what day? 14th Feb. How many marks? 6 marks. Are you following, guys? This and all can come. I won't tell final question, difficult, guys. This is the proper worthy question. RTP November 21, CA final, now CA inter. Okay. Next. Delegate Limited, incorporated in Singapore, desires to establish place of business at Mumbai. You being the practicing CA have been appointed by the company as a liaison officer, that means doing legal work for them, for compliance of all legal formalities on behalf of company. Examine with provisions, state documents that you have to file after establishing place of business in Mumbai. Which section, guys? 380. File within 30 days. Inform FC1, MOA, AOA, passport, director address, KYC, all of that. It's there in 380. Have a read. Are you following, guys? Clear? That's it. Question number 10. Okay. Fine. We'll come in reverse now. Simply just for change. No respective point. Question 16, say I have to finish all the questions. If it's getting late for anybody, feel free to silently leave the class. I am completely alright because recording is there. You can watch in recording if you are staying for. Otherwise, others stay for another 15-20 minutes. We will finish. Recording students, no, not talking to you. Continue watching. Okay. Now, Z Limited, a foreign company incorporated in Japan. Recording students keep repeating with me. Which chapter are we in, guys? Foreign company. 379. Whoever, recording 379. Applicability of foreign company. 380. Documents. 392. Penalty. 393. All contracts. Fine. No. Foreign company incorporated in Japan has a branch office in Hyderabad in India. Mr. Bharatiya, the Indian citizen, holds. Is this a foreign company? Yes. Okay. A question is given foreign company, guys. Okay. Indian citizen holds preference shares of Z, which comprises 10% of the paid up share capital. Desi Limited, a company incorporated in India, holds equity shares of Z, which comprises 45% of the paid up share capital. Now, is it a foreign company? Yes, it should follow all provisions because 10 plus 55, I am saved. Not less than or more than, I don't care. More than 50 came off. Then during the financial year, there has been alteration of particulars of documents under section 380. If there is alteration, file to ROC within in form FC2. That's it. Company has failed to submit alteration. 392 penalty within 30 days. Analyze in light of provisions. Failure of the validity of any contracts. No contracts are still valid. 393. So they are testing 392, 393 and 379. It's a company which complies all provisions. 6 marks. Are you understanding, guys? So first you have to write it's a foreign company where more than 50% of paid up share capital of preference and equity together is held by Indian company and Indian citizen. Therefore, all provisions including this chapter is applicable. As per section 380, whenever there is a change, you need to update them in 30 days in form FC2. And then, whatever, even if you don't file, penalties in section 392, but the contracts are valid in section 393. That's it. 6 marks. Are you getting it, guys? Question number 16. Come on, guys. Read with me. Recording students and everybody here. X, a foreign company registered in UK. Loudly, guys. Carrying on trading activities with principal place of business in Chennai. Since the company did not obtain registration or make arrangement to file return, registrar having jurisdiction intends to serve a show cause notice on the foreign company. As standing counsel for the department, advise the registrar on valid service of notice. Which section? 380. This section which says, one second, guys. Go down. Okay. This section is what is being tested. Service on foreign company. Serving a notice on the authorized person is equal to serving on the foreign company. Do you remember this, guys? This is the one. So 383. That's it. Recording students, I hope you heard our friends here reading loudly. You should have also read. Got it, guys? Quickly. Now, question number 14, 13, 12, 11, 10 now. Quickly, guys. That's it. All the questions are small now, except one that I kept it for the last. Search and find PTE incorporated in Singapore. Company sells its goods through electronic mode on e-commerce platforms in India. Foreign company, yes, electronic mode, place of business. It does not have any branch office in India. No problem. Is the company required to submit documents under 380? Yes. Proper 3-mark question. Like this you expect. Don't get scared looking at that first question. Dollars, million, pounds, all of that. Euros. Okay. Arica is a company limited incorporated in Singapore. Desires to establish a branch office at Mumbai. You being a practicing chartered accountant have been appointed by the company as a liaison officer. Same question. Whether branch office is required to follow, consider as company incorporated in India. Outside India. One second, I should have read it properly. You company incorporated in Singapore decides to establish branch office at Mumbai. Place of business in India. You being CA appointed as license officer. Okay, answer the following questions. Whether branch office is as company incorporated outside India? Yes. Is it a foreign company in Kekra? See, whether branch office be considered as a company incorporated? He is asking, is it a foreign company? What is this chapter called? No, company incorporated outside India. Are you following, guys? Clap, yes. Okay. See how he is testing, guys. Chapter name, whether it's a company incorporated outside India. Yes, branch office is a physical place of business. See, final questions are going to be like this, guys. Left, right, center, he will test us. But, what to say, we are in inter. Again, I'm telling so many times, I don't want you to lose confidence at the end. Because of the questions, we will get little one level below these questions only. That I can guarantee. Next, if yes, state the documents to be filed. Section 380, FC1, 30 days. And all those documents. Super. We have 13, 12, 11, 10. Quickly, guys. 1 minute each. Analyze the following. Whether it's a foreign company. Company incorporated outside India and registered in Moscow, Russia, has installed the main server in Moscow for maintaining office automated service by computing for its client in India. Answer. Yes. A company incorporated outside India employs agents in India but has no place of business in India. No. Yes, you are getting the hang of it now, guys. Super. Company incorporated outside India, registered in Australia, has authorized X to source customers and subsequently enter contract on behalf of the company. Yes, presumed place of business. Super. A company incorporated outside India, registered in Mauritius. All the honeymoon locations they have given us in this chapter. All the business models, financial strategy, important decisions are carried out and taken by board meeting held only in. No, that's not place of business. You do meetings, we don't care. Okay, that's it. Oh, meeting I said not in Mauritius, guys, in India. Recording also is going on. Come on. Fine. Question number 12. Quickly. CNC is a foreign company having place of business in Mumbai. He gave the answer. Okay. And Ahmedabad in India. Why none of the questions has place of business in Chennai? One question is there. Okay. It has amended its memorandum of it's there. It has no relationship. Random locations come, guys. I should rather ask why Nagaland is not there. That's a valid question. Okay. Amended its MOA on 1st June. Okay. Amended its MOA on 1st June and closed the branch office situated in Mumbai. Referring to the provisions, advice, compliance procedures regard to amendment of MOA. FC2, alteration FC2 within 30 days. Compliance procedure as regard to closure of Mumbai office. So because they closed the Mumbai office and discontinuing submission of documents to registrar, so they are saying after this we won't file. We are not a foreign company. Is it right? Why? One more office is there. No, you forgot. Ahmedabad. Even if both offices are closed, check if they have online electronic presence. So place of business here is there in Mumbai office and Ahmedabad location. Are you following, guys? Easy. Clear, guys? Done? Next. That's it. Last two questions, guys. Question 11. RFC Limited has been incorporated in Singapore and has place of business in Mumbai. The company has issued 5 lakh shares of 100 each US dollars consisting of 4 lakh equity shares and 1 lakh preference shares. I will consider both, guys. I will consider both. Why for this chapter they are considering both and not only equity? Total paid up capital, how much capital is contributed. They are not looking at voting power here. Okay. The issued share capital is fully paid up except 5,000 shares of 50 which is. So what you have to do for denominator? 5 lakh into 100. Okay, 5 lakh into 100. Let's do the whole thing itself. I will do for denominator 5 lakh into 100 minus 5,000 into 50. Are you getting the logic, guys? How much are you getting? 4 crore 97 lakh 50,000. Are you getting it? Paid up value. Call scenarios you will remove. RW, some guy holding 26,000 preference shares which include 1,100 partly paid up shares, and Ronte having 2,23,500 shares. First let me do equity. 2,23,500 into 100 of 100. This is full. For preference shares, how I should do? 26,000, out of which 1,100 are partly paid up. So I will do plus 26,000 minus 1,100 into 100 plus 1,100 into 50. Making sense to you? Understanding? Remove the paid up part in the numerator and denominator. What's the percentage we are getting? Quickly compute, guys. How much, guys? Exactly 50%. Beautifully drafted question. Plan pani senjirukam. You make one mistake also, it will go up and down. So this is what company? Foreign company. I am taking the answer of Riya, guys, recording students. If it's not 50, don't ask me. 50. Yes, Rakshi, everybody confirm now. 50 is correct. Okay. Following, guys, 50%. All of you clear? Understanding logic. I am removing, what to say, calls in arrears in the denominator and numerator and finding the balance, which is 50%. Okay. Next. Come to that means this company has to follow all provisions of the Act. They have to follow all the provisions of the Companies Act. The ROC issued notice under section 379 of the Companies Act addressed to the person whose name has been delivered to authorized person. They have sent notice under section 383 to authorized person for complaints. The above notice was delivered at the address which was given by RFC. Kurta address I delivered. Whether RFC is a foreign company? Yes, but they also have to follow all sections from 1 to 470 as if it's an Indian company. Whether service of notice by registrar of companies is valid? Yes, as per section 383, serving notice to the authorized person is equal to serving notice to the foreign company. Are you following, guys? Rohit, understanding? Sure?
Yes, sir.
Okay. Section number? Section what? Which question? I didn't ask question itself. What section? 11 now. Question 11. Yes. Okay. Fine. No, I just confused you on purpose. Don't worry. Okay. Last question. With this we will close foreign company. Again unique question. Hey, let me see. Fine. Like this, how we are doing past exam questions practice for this chapter. You in the book you have for all chapters. You should practice that. That's not going to be hard because they are all inter questions like auditors chapter, dividend meetings, just for more confidence. Okay. Purida, guys, first row. Purida, sure, Purida. Okay. Fine. Follow. Slowly you will understand. Answer is there. Go home, process it. Today revise this, guys. Okay. Blue Star Incorporation is a company incorporated in USA 4 years back and had no established place of business in India. So there is no established place of business. Physical is not there. The company entered the following contracts. Company entered an ordinary course of business 4. Material contracts 2. Like that they gave for each of the years. Normal contracts, material contracts. Where is this material contracts coming for me in the provision, sir? In prospectus chapter, section 389, registration of prospectus. Here we have one thing. Details of material contract entered in the last 2 years should be submitted. Correct? This point they are going to test. 3, Mohit is searching. Yes, 389. Point number 3. Registration of prospectus should contain some attachments. In that last 2 years material contracts. So here what could be the last 2 years material contract without reading the question? 1920 and in this 3 and this 4. That's what I think the question will be. I don't know. Next. From the above, one contract has been entered into with its manager. Company intended to offer its securities in India. For that purpose, Secretary of Company Berry Christian prepared the prospectus along with annexing the required documents. That's why the question is getting it, and it got registration of prospectus. Experts' consent was issued in a separate statement, the reference of which was given in the prospectus. Few application forms for securities of Blue Star was issued to prospective investor without the prospectus, out of which one form was issued in connection with bona fide invitation to the person to enter into underwriting agreement. Underwriting means all these are not needed. With respect to securities, answer the following questions. Whether expert statement can be considered to be included in prospectus? Answer guys. Yes. Whether what copy of contracts would have been annexed with the prospectus by Mr. Berry? Material contracts of last 2 years should be added. Whether it is valid on the part of Blue Star Incorporation for issuing few application forms without prospectus? No, but exception is what? Underwriting. It is not valid, but exception is what guys? Underwriting. They are testing that prospectus provisions. Are you getting it? Sure. Look at this. Whether it's part of Blue Star, read this point. Where is that Blue Star? So here look at this. Were issued to prospective investors without the prospectus, out of which one form issued was with respect to underwriting. That underwriting alone is fine, remaining everything else is not fine. Are you understanding guys? Clear? With this, we are done with foreign company. Recording students, bye bye. See you in the next video.